In November 2022, $8 billion vanished, not in a market crash, not in bad investments. It was stolen, deliberately, systematically, from over 1 million customers who trusted a man with a messy haircut and a calculator. Sam Bankman-Fried had built FTX into the world's second-largest crypto exchange. Politicians trusted him, celebrities endorsed him, and all the while he was running the largest financial fraud in history. We have the documents that prove it.
FTX, the company that promised to revolutionize finance. The documents tell a different story, one of secret accounts, hidden transfers, and deliberate deception.
Sam Bankman-Fried launched FTX in 2019. By 2021, it was valued at $32 billion. He cultivated an image of the altruistic billionaire sleeping on beanbags, driving a Toyota Corolla, pledging to give away his fortune. He testified before Congress. He gave millions to politicians on both sides. Tom Brady and Gisele Bündchen filmed commercials. Larry David said no to crypto, then said yes to FTX. The brand was bulletproof, or so everyone thought.
Here's what customers did not know. FTX and Alameda Research, SBF's trading firm, were not separate companies. They were the same operation. Internal Slack messages later obtained by prosecutors showed that Alameda had a secret line of credit built directly into FTX's code, a backdoor. When customers deposited funds on FTX, Alameda could and did use that money to trade, make loans, and fund SBF's personal expenses. Court documents show transfers beginning as early as 2019.
On November 2nd, 2022, CoinDesk published a leaked balance sheet from Alameda Research. What it showed was devastating. Alameda's largest asset, nearly $6 billion, was FTT, FTX's own token, a token that FTX itself had created out of thin air. The company was holding its own printed money as collateral for billions in loans. Crypto journalist Ellison had the document. The receipt was real, and Binance CEO Changpeng Zhao had read it.
On November 6th, Changpeng Zhao tweeted that Binance would liquidate its entire FTT holdings, approximately $500 million. The tweet caused a bank run. $6 billion in withdrawals hit FTX within 72 hours. FTX froze withdrawals. SBF scrambled for emergency funding, texting every billionaire he knew. None came. Meanwhile, internal messages later entered into evidence showed Caroline Ellison, Alameda's CEO, knew the funds were gone. She had been moving customer money for over a year.
Caroline Ellison flipped. She pleaded guilty to fraud charges and became the prosecution's star witness. In court, she described receiving explicit instructions from SBF to use customer funds. She showed prosecutors the spreadsheets, the actual documents where Alameda tracked what it had borrowed from FTX customers, line by line, billions accounted for, spent on Bahamas real estate, political donations, venture investments, personal loans to SBF's inner circle. The paper trail was meticulous. They wrote it all down.
Sam Bankman-Fried was arrested in the Bahamas on December 12, 2022, and extradited to the United States. He went to trial in October 2023. His defense, he did not know. He made mistakes, but the evidence told a different story. 31 witnesses testified against him. Emails he had written himself, Slack messages, wire transfer records. The jury deliberated for 4 hours and 48 minutes. On November 2nd, 2023, exactly 1 year after the CoinDesk leak, they found him guilty on all 7 counts.
Sam Bankman-Fried was sentenced to 25 years in federal prison, $8 billion, 1 million victims, and a paper trail that made it impossible to lie. If you want to see more cases where the documents told the whole story, subscribe to Paper Trail. Every week, the receipts speak for themselves.